Engel from SAIT. I'm here with Jerry from the CPD Consortium today, and what we wanted to do this year was kick off the year for you and the year ahead. He's going to look at tax strategies, I'm going to talk about tax policy, and we're surprised. We've got a lot of interest here. We thought people were just rolling out of bed from vacation, so we're glad to have you on board. Let's see what this year's ahead. I believe it'll probably be better than last year, at least by slightly, and here we go. So let's get on to the issues. Jerry, do you want to say something first?
No, I think welcome back, everyone. The world looks far different than last year this time. It's going rough in Europe. I see Mauritius has got huge floods, so I hope they're safe. I think so with all these things happening around us and all these elections, I think we're quite blessed and safe to be in South Africa at the moment.
No, I think we are. And you do see, as been reported, that a lot of people are coming back to SA and having the benefits, and George is a good reason to come, I must say. But it is interesting how, from month to month, things look different. How I felt in November and how I felt in January is completely different. But let's get going and let's talk about our first man up to bat is, what's the future of SARS? Because we're talking what's the year ahead. So when we're looking at the future of SARS, I think the first issue is Mr. Kieswetter. So Mr. Kieswetter's term of 5 years is coming to an end. There have been discussions that he may or may not renew. We'll see which way he goes. But what's happened over those 5 years and a little bit before, we have gone through a lot of transformation. And so when we look where he was and where he is now, I must say that he's beaten expectations. I think when he inherited SARS, and I think from Mark Kingan, who also started to turn things around, SARS was in a lot of trouble. SARS had lost its shine, and I think they've come back quite strong. And that evidently, at least from government's point of view, they keep beating the revenue estimates. So they did it again. Now, when we talk about beating revenue estimates, first, we're not so happy because obviously that meant we had to beat somebody. But what they've done is they've expanded the tax base in a way that even Gordon had not done. So what he's done is he's taken a bunch of different strategies where he's trying to get the wholly non-compliant compliant. So you are expanding the tax base, even though the economic base may even be static or shrinking. But the point is, he's getting the guy who's not paying anything and trying to bring the illegitimate into the legitimate. And I think that's worked for him. I think it's worked for him that he's pushed on a lot of systems, which we'll talk about, and he's expanded the base in a lot of low-hanging fruit, but he's very big on IT, which we'll discuss. So we're seeing that, and if you take a look around, the revenue service is a lot more than it once was. Now, there's still complaints about refunds. I still expect complaints about refunds, but those numbers have reduced as well. They are paying out a lot more refunds. There are people who have problems, but the situation has definitely improved. And if you look at revenue service overall, it is a much more active organization. He's turned it around a lot. Is it perfect? No. Are there problems? Yes. There are operational issues. But if you deal with other tax revenue services around the world, you'll find that SARS is much better than most. So his trajectory, in my mind, he's done quite a lot. There is operational issues. We can talk about AIT. There are a number of them where things can go a little faster. But they are on the move, they've done a lot, and they've become much more engaging. So overall, when I look at his term, I can see that he has done a lot. The big push we'll talk about later is he is trying to expand information and database. The one thing you will see on Kieswetter's mind is he doesn't trust self-declaration. He wants third-party data. He wants easy corroborating data. And that has been his push, and I think it's worked. Whether he will continue, we don't know, but we definitely see a trajectory of expanding the base through third-party data. I think that's my view. What is your view, Keith?
I must be careful. Yeah, I think more interesting. I mean, he had a big challenge. I think.
Yeah.
Had a big challenge in terms of competence within SARS. I think. He a lot of doing so well have to do with having a marking in there that did a great job stabilizing a difficult ship, not a job I would have.
Yeah.
Perhaps Keith, just as a closing remark, when we chat, you mentioned how things are going with US taxes and their e-filing. Perhaps you could just share that.
Yeah. So unfortunately, I am still a U.S. taxpayer, which unfortunately that's the downside of U.S. citizenship. I'm a dual South African U.S. who lives in South Africa full time. But the price of being an American citizen abroad is you have to pay U.S. tax. So I wanted to pay my tax and do it via e-filing. And I was notified by the IRS that the e-filing system has been down for 2.5 months. They're not sure when it's going to come back online. Now, just imagine if Kieswetter had done that. So that's his point. And I'm going to have to send a note somewhere because I'm just stunned. And if you hear the UK, it's very similar. Anyway.
Yeah, so that did well. Good.
Okay, so now we move on. So locally we are seeing, and just the point is locally what we're seeing is rather than raise tax rates and change the law, Treasury is relying on SARS to increase the tax base through enforcement. That's what we're seeing. And we're trying to get out the wholly illegal, and that has worked. On the international space, we also see things going on. And I think the point in the international space is, as a taxpayer, it's not the friendliest environment. Governments have spent way too much money. They spent too much money in 2008. They were just beginning to come out of it. Then they spent a lot of money in 2020 with COVID. And now everybody is deep in debt. And so what you're seeing is that governments are trying to get money around the world. And the biggest thing is they can't raise rates even though they want to. So what they are trying to do is change the law to make sure that those who are perceived to be not paying must pay. And so that's why you have all the pillars and the BEPS and all of that. And what you see internationally is a push that everybody wants to make sure that nobody goes to a place where they can get away with escaping tax entirely. And they're also pressuring all the low tax countries to raise it higher. So the big issue on the agenda, if you go onto YouTube, there are many YouTubes about minimum taxes, that there's going to be a 15% minimum tax for the super big companies. So it's not going to hit everybody, it's just the super big companies. But they're basically, the high tax states are saying to low tax states, you can't. We're not going to allow you to have a low tax rate on a multinational. It must be at 15%. Now, very simple, 15% minimum tax for all big guys. Just look at the 500 pages of explanation. There's a whole army of people focusing on how to change your system to deal with that. So that's what's going on from a sort of an OECD European point of view. What you also are seeing, and we know this a lot longer than most people, the UN doesn't trust the world tax system, neither does ATEF. And what they're saying is the European countries, the US, Japan, all of them are getting more than their fair share. That when foreigners come in to invest in us, we're not getting our fair share. That people are doing work here and they're not paying their fair share of tax. So the UN has had a battle going on with the OECD to say who is the primary multinational jurisdiction that's going to dictate tax. And recently the UN has made some things where they're saying they're the ones now. And you'll see that basically the view, and you'll see it from ATEF and other ways, more tax on foreign investment is a good thing. The problem they have is tax it too much and it won't come. But they don't seem to be too interested in that right now. So the world of the multinational, or anybody doing cross-border, is increasing double taxation. And you need to take into account risk much more than reward as before. And so, Jerry, in that world, are you seeing much from a South African point of view, the grab at foreigners?
I think we, in our world and our practice, we see it perhaps in something like a timing difference, where somebody has not considered the tax implications. I think there's 20 treaties where if you get a pension from South Africa, you've worked here forever, and you immigrate to another country, you become resident there, you pay tax in another country, basically that first taxing right shifts to the other country. So you literally have to pay tax on that side and then reclaim in South Africa, so that creates a timing difference.
Yeah.
And I think on those things, you know, we've been quite busy in our practice in terms of trying to kind of educate the market to say, do your planning up front. And I think that is part of the narrative that's become part of the modern tax practice, and probably part of the narrative of a SAIT as well, is guys going to have to become more proactive. The days of just doing something and hoping in the end that you're fine, you're in trouble.
Yeah.
And at a far more junior level, we deal a lot with obviously South Africans investing abroad, South African businesses going abroad, and what we see is that kind of if you speak to in South Africa, our regulation is very light. I think it's no wonder that we're kind of in a grey listed type of territory, and we'll talk a little bit about that.
Yeah.
But if you speak to the guys in Jersey, Guernsey, Isle of Man, they'll tell you that it's a matter of time before Mauritius gets grey listed again.
Oh.
They'll say to you what they are required at the moment to do in those territories. They'd say not double, 5 times as much compliance as what it was a couple of years ago. And they basically say, yes, Mauritius got out of grey listing, but Mauritius will, at the moment, not pass the test if they are subject to the same level of scrutiny as what they are enduring in those locations. So I think what we're starting to see is definitely a shift towards more simple structures, more cost-effective structures, and guys looking at the jurisdiction where they put their money, where the structure is not prohibitive.
Yeah.
Because the view of putting up a simple offshore trust structure for a client of yours, and you have to pay a couple of $1,000s for that per year, that's without asset management fees or stuff like that involved. I'm just talking about normal compliance costs. And you multiply that with how long do you think you've got to live? You know, you multiply that with a number, it becomes a pretty big number. So I think there's definitely, globally, it's impacting South Africans, especially the client base, I think that the modern tax practice wants, which is somebody with a bit of international assets.
Yeah. Yeah, I think the point is complexity was good because you could reduce tax. Now complexity creates a hell of a lot of noise.
It might not be worth it.
It might not be worth it. The thing that I've seen, just one that I think most people are aware of, is if you invest in Africa, you'll see that if you want to pull cash out, they're going to want their tax first. And you'll see pulling money out of a country, it's gotten very territorial. They don't really care what the reason is. If they see money going out, they're going to want a piece of it. And that gets me to another question. How often do I pay the tax abroad? But then they don't give me the right pieces of paper that SARS won't give me the credit.
Yeah, I think we've had less issues with that. I think that I mean the name of the game there more is South Africa is a very, very useful territory into which to base a payment into if you get paid from Africa. So I would kind of go on record to say, if you've got a client international that approaches you to say, where should my Africa charges go to? I would kind of argue run it through South Africa.
And that's because it's easier to recognize their paperwork?
Just because you would in many cases, because of the treaty and the recognition and the use of the payment, not suffer the withholding tax that you would otherwise.
Yeah.
I'm specifically talking about, I think, where the money sits at the moment, it seems to kind of be the Zim, Zambia, DRC type of route. There's a little bit of talk about Mozambique, I think, waking up. I think the moment you go further north into the Kenyas of this world, there's a different group of advisors that look after that. I think it's a South African practice that looks at international clients. That's probably your easier range that you're talking about. But I mean, I think there's a planning step there where a lot of South African advisors, we can compete internationally due to the strength of our treaties, our African network, and our strong banking network that we've got in South Africa. And I think those are the type of clients that the practice wants.
Yeah, no, I agree. And I think just to close on that is also, you know, we talk about exchange control, but exchange control is only there to keep South African money within South Africa. But when you're talking about foreigners can get money out of here much quicker because of cash liquidity and all these other things. And exchange control does not apply to foreign investment. Whereas if you go to Nigeria, the money is tracked. So, the money, even though there's this word exchange control, for foreigners really doesn't mean much. It only means something for South Africans.
Yes, but even for South Africans, if you set the correct CFC account or the right structure, it's a bit of admin, but once you're used to it, you're fine.
Yeah. There we go. Yeah. Now we move on to the next thing, which you hear different members in the operations, which is what SARS doing electronically. They've got automation, auto assessments. Let's begin with auto assessments. What's the world of auto assessments? How's that going now? We get a lot of noise back and forth. How's that settling out?
Well, I think, Keith, for me, if we talk number one threat to the normal tax professional out there, the guy that just do a couple of tax returns per year, you've got a client base of 200 to 1,000 or so normal taxpayers that you look after at various layers of complexity. I think auto assessment is, if you see the direction of it, that should be your number one threat. It perhaps didn't have a great start, but let's say there was a 10% improvement year one. That's humble. It's far more than that. But let's say there's a 10% improvement the next year. The wind is blowing in a direction where, in many cases, that auto assessment is 100% correct. And the client is saying to you, well, why should I pay for something that is automatically done, automated, and the assessment's correct? And especially if it's a break-even situation, why don't I want you to pay you anything for that? Now, we saw that coming, so our client base is not really there. But if we're talking about opportunities or risks for 2024, I think that should be front of mind in terms of where does the practice value lie on clients like that? Or must you just accept that having a client base of people that earns normal salary, no travel allowance or company car, so we're not talking about 80% treatment there, retirement annuity, medical aid, bank interest, perhaps a bit of investments with interest and dividends and capital gains, is that really where you want your practice to be? You probably only do those returns to stay relevant in their life for some other reason. That is why there's financial planners, like the FPI, where I'm a member as well, that would do for free a guy's tax return. And that's also why they're obviously a controlling body, because I want to look after the guy's finances as a whole. But auto assessments individuals is I think a preamble for what's to come on trusts, companies, etc. And I think it's caught many practitioners by surprise with how quickly they kind of got it right.
Yeah, and then, look, there's always issues on the edge, and there's sort of two things. I mean, first of all, I always say the individual return business is far riskier than it's worth. I mean, from what I've heard in the industry, doing an individual tax return is maybe 2,000 to 3,000, and sometimes 1 to 2 if it's very simple. And the question is, it's so small, and if SARS audits the guy, it's a lot of risk for a tax practitioner for such small amounts to be able to keep it going. So, but the days of getting 100 easy returns to work through in July, followed by another 100 in August, I think those days are gone. There are a few people that should be able to claim a few small deductions, that if they accept the auto assessment, they're going to lose those deductions. But the amounts are so small, it's not worth fighting for. So those guys are gone. And then the place that's left is the more complicated individual, or the guy who he owns the company and you're looking at his return because you do his company and you do him and his family. So I think that business is pretty much it's pretty much a goner at this point for the mass inventory. Yeah.
I think where my mind sits is in George. It's only, I think, last year, as far as I know, that our last video rental business closed down. And I think it's also last year when Netflix said that it posted its last DVD
Yeah.
or something like that. So I think as tax practitioners, we must not discard it. We must not underestimate how long that tail can be. But there's still good money there because the market is slow to catch on.
Yeah.
But the curve is downwards.
Yeah.
And you are consistently going to see that curve going down, down, down. So if you're in a practice where you say, listen, I don't really want to reinvent myself. I accept my fees is going to be slightly under pressure. I may have a bit of a leakage there, not a replacement. I think it's still a good business to be because it's going to become, you're actually going to get paid for doing less, if I can word it like that. But I don't think if you're at the space of growing a practice or being in control of your own destiny, that's really where you should be. At best, I think it is a place which sets you up for kind of what's next.
Yeah.
And I think the speed with which you can have to reinvent is very quickly because change is happening very fast now with technology.
So just to point there, because some people have said this, if you have a SARS, if you have clients with SARS auto assessments, then probably if you want to keep them, you should probably be proactive. You'd have to say, look guys, in your case, I don't need to look at those returns anymore because we know that it's covered. But there are a bunch of deductions you're typically going to ignore, and you notify the client, yes, you can take that auto assessment, but I'm going to tell you now that every year I've dealt with you, I know there are a number of deductions that you should be able to take that the auto system isn't able to catch on to. So there is a business in there, but it's a different one, and it's shrinking as the SARS system gets better. And yes, then you're really doing, if you have an automation, you're really just reviewing a return, not preparing a return. So it's a different model entirely.
Yeah, and I think it latches onto IT3Ts are coming in this year. It would have come in last year.
Yeah.
Those distributions that get made by trust that fall under 25B or 80, which I think a lot of people was very naughty in terms of trusts in the past. I think it's going to become a very, very closed space.
Yeah.
And I think that IT3Ts is probably going to automate to a large extent trust returns as well. It is, if you look at last year's trust return compared to now, I think we kind of measure how long it takes us to do a certain trust. And where 2 years ago, it would take us an average 10 minutes to do a trust when you've got certain information. It now takes us an average 40 minutes to do that same trust return. And we can certainly not charge more for it.
Yeah.
So clients don't understand that. And I think, Keith, again, it's a space of educating the market and about how much more detail is required, how much more you have to be precise.
Yeah.
And the fact that whatever you put down now electronically, the system did not forget.
Yeah.
You'll be amazed with how many cases we've got in topics we'll still cover, where the SARS comes to us with something that happened 3-4 years ago, but we see that was there. Where is this now?
Yeah.
And I think a lot of tax practitioners potentially might even create a liability for themselves in the way that some just do AIT, in a quick way by completing a statement of assets and liabilities incorrectly. I don't want to morph into that topic. I'm just saying technology is playing a massive role in changing it.
Yeah, I think you're getting to an interesting point, is that technology is simplifying the world. Enhanced enforcement and regulation is complicating the world. So the question is, you're going to be losing on the IT side because they're going to be filling things. And also I think you get to the point is, once something's on that computer, you got to get it off or change it if it's wrong. And if you ever saw the Little Britons, the computer says no. If you remember that little comedy skit, you don't want the computer saying no. So your battle is making sure things do not go onto the computer that shouldn't be there. But when you're also looking at the situation, the regulations are picking up. So now you have to do a lot more, like trusts, you have to do a hell of a lot more. We're skipping over VAT for a moment. So VAT, what they're trying to do is what they're trying to do with individual returns. Individual returns, it's pretty much a one-way street because all the information is out there. But if they've modernized the VAT system, they're going to suddenly make those returns a lot more complicated. So for a while, you're going to find the VAT work is going to increase. But then they're going to try to make sure all the numbers move over directly without that return preparation. And then you're going to find that business is going to decrease. What you're finding in the world of trust is it's more reporting, more regulation, but the IT hasn't caught up yet. So there you're going to see a big boom in business and complexity. But yes, I think you raised this point. It's gotten more complicated. You got to charge more for it. But the client is under economic pressure. So he doesn't want to pay for it. So how do you deal with that?
I mean, I think that you have to segment your client base. I mean, you have to pick where you want to operate. So I think, I mean, for we in our practice, we've got a PPN network, a professional partner network, and we run a WhatsApp group for them. And if there's anybody on this webinar that feels, sure, I'm a little bit short of clients, please reach out. We will send you leads, because we get lots of leads, which is simply just not what we are geared to do. And that is not a statement of it's not a valuable lead. Sometimes it's a very valuable lead, but it is just not in our game that we're good at. And I think that for the modern tax practice, the era of generalization is going to become very, very risky and a big challenge, and it's not knowing what you don't know. Perhaps you can give that example of the US with that specific specialized.
I mean, in the US, it's gotten so specialized that you might actually deal with one section of the act. So there's somebody I know, she went abroad to the US, spent 5 years, came back, and all she did was R&D. Section 864 of the US Tax Act. Okay. So, you'll find, but again, the reason why is even if you know, let's say you've got corporate returns, you've got VAT returns, you've got trust returns, you've got different returns. And let's say you know all the law for all of them. The problem is mentally, when you're working on a corporate return and then shifting to a trust return that's very inefficient, you actually need to just focus on the corporate returns or the trust returns and do them like inventory in order to speed up that processing time so that you're fast. Your mind can't keep shifting between one thing and another. And that's why I think what you're saying is you have to specialize.
And I think on to kind of the next topic is if you do, for example, specialize in that space where you look after somebody, company, trusts, you understand the family, you're the holder of that KYC information, that beneficial ownership type of information, I think clients become sticky because you're the depository of that record. I think if in the modern tax practice, you pretty much have to go give the same information to a number of authorities, and I mean it's a copy paste. But it's complicated. So I mean, what you're getting to now is when we shift to beneficial ownership and KYC. So you've got the tax system evolving, and now you've got what you see is tracing, that we are trying to make sure that you are an honest person. And as an honest person, we want to trace what you own, just sort of like in customs, right? If you import things, where did it come from, China or wherever it came from? We're increasingly asking you to trace your flow of funds and trace your ownership. And so what you're seeing in AIT, you're seeing in trust, beneficial ownership. If I just want to go to the bank, I might set up a great structure in Guernsey, Jersey, or Isle of Man, but the bank won't accept me because I don't have enough documentation for the bank to accept it. So what we're now seeing, another business which is emerging, is just being able to prove to government that you're an honest person. And now you have a whole bunch of regulatory requirements, and what you're referring to is the beneficial ownership test. And we sent in a submission, and we said, look, if I want to show who owns my trust, I've got to go to the master's office. If the trust owns a company, I've got to go to the company office. I have to go to SARS, and I have to go to FIC. And if I have a structure with a trust with different companies, I have to do each one of them basically the same,
but not exactly for each form. And if I make a change, I got to give it at different times, end of year, 30 days after it happens. And I have to keep track of just nothing about tax, of who I am on a chronic basis to 4 different regulators at 4 different times. And there you see a whole business going on, and I got to do it quickly. Now, most people say, oh, I don't want to do that, right? Because it's a pain. But now I want to move my money to Mauritius, or I want to move it to the UK, or whatever I want to move it. Then the bank goes, I don't know who you are. I don't trust you. You don't got the forms. So I don't care about your structures. You're not getting into the bank.
Yeah, and Keith, again, we should not fear monger our clients.
Okay, sorry about that.
And that's not what you've done.
No.
It's more preamble to what I'm about to say.
Okay.
But we've literally seen how funds get stopped or blocked or returned because you cannot explain the money.
Yeah.
Now, where my mind is going, if I'm in this space, is if you are not, let's say you're a wealthy guy, and you've got a farm or a set of businesses and a structure, and in families there's conflict and stuff happens, and the right guys are not noted as the ultimate beneficial owners, and there's a fight happening. When's the day going to come when somebody turns around, that's the other party, and say, for the past 5 years, all the evidence on record is you're not an owner, and here you are in front of the court purporting to be an owner, that's in conflict. And I think that a lot of people in the trust space, especially the beneficiaries, who's not always worked for the buddy, kind of an easy come, easy go type of concept. I think the system is going to catch out a category of people in time. And I think that is where just being a normal tax advisor that completes a tax return, one of my partners still said when she worked at SARS, they would still do a tax assessment by hand, a calculation, and give it to the typist to basically go type it out. I think as the industry morphs to where it's now very digital, very automated, I think the type of service you're going to have to go to is more to become a trusted advisor, because tax is central to everything. And obviously, we're not just saying it because it suits us. We're saying that because of the saying death and taxes.
Well, I think it's often the trigger. I think the key thing is a lot of things you require for tax is a certain level of accounting. And you need to do that to protect you, not necessarily from SARS, but actually to run a business. But more importantly, also, how's your relationship with your fellow shareholders and your family? So the difficulty is that, yes, when you talk about a trust, if people haven't watched the money flows, then you're immediately going to be subject to a lawsuit once the bad things happen and the family relationship falls apart or the partnership falls apart. So I think the point that you're saying is that risk has always been there. Tax is pushing it to the front of mind, but really you shouldn't just be doing it for tax. You really should be doing it for other reasons, even though it's a cost in the long run for your preservation of your relationships and your business. You really have to pay it. And unfortunately, a lot of people don't pay those expenses because they think it's not important, and it comes back to bite them in a series of ways, not just with SARS.
Well, the easiest way to bite them, and that's ideal to catch a top of a client, is when SARS had just reached into their bank account and taken the money.
Yes, that's right.
And then, of course, they're very upset. And how could they possibly do that? Because I was never informed of that. Also, they claim. So that's happening a lot these days.
That is. And we're getting to the issue of collections and other things. The one thing I would say first is, again, one thing that we have to manage now already from an IT point of view is our e-filing systems, right? We need to know, we're in control of that system as practitioners, and the client needs to know what's going on. And when they get an assessment, I think what happens is things get lost along the way. People don't understand what SARS is doing or why. They can't read what the SARS assessment is. There's a gap, and then all of a sudden there's that collection. And so what you find is the people who are burying their head in the sand for one reason or another, it comes back to bite them in a very serious way. And the issue that comes around debt collection is that bank issue. So one of the things you're increasingly seeing is all currency is electronic, right? The US, everybody's pushing for it. So IT can have an invasion process where they can control your money electronically a lot more than controlling it in cash. And that means you are very vulnerable on that side. But the question is, what do you do about it? I think at the end of the day, when it comes to the debt collection issue, I've seen things have settled down a lot. SARS doesn't just swipe your bank account. Usually it's because things are not getting through. There is warnings going on. But then the SARS now, when it comes to the debt collection, they have become more reasonable. But there is pressure on the book. They have billions and billions to collect. They're talking again about using third-party collections. But when you get down to it, if you're in control of that process, you can do a lot for your client. So it's not like, oh, I owe money as SARS and I should just bury my hand. If I deal with SARS, and I can help my client in a lot of ways in that regard. And you've seen that, right?
Yeah, I mean, Keith, our world is, I think we the first thing we needed to do is any tax practitioner that's on here or anybody that starts in this game is you must run a squeaky clean e-filing profile. And we use a little system called Tax Check for that. There's a couple of others out there, but you need to know exactly who your clients are, how compliant they are. You must get rid of those so-called ghost profiles. It's a criminal offense to be a tax practitioner for somebody that's out informing SARS of it. I don't think it's getting enforced. But the day is going to come when SARS is obviously going to clamp down on tax practitioners to say, hey, half your client base is got red next to them and not green next to them.
Yeah, and I think just to note that we as RCBs, recognized controlling bodies such as SAIT, they give us a report every year, an aggregate report without any names. And they will say, here is your tax practitioners. This is how much your tax practitioners owe on the system. This is how much your tax practitioner clients owe on the system. And they note that, and they give you little comments there. They don't enforce it, but they kind of put that little shame on us sometimes for bad practitioners or practitioners who are not in control. My understanding is they do keep some sort of eye if you're a practitioner and you have lots of problematic clients. And I'm not sure how that system works, but it is being noticed at some level. And if that system gets better, you're at more and more risk for people that you don't control.
I think that that's something that's a future risk that's just going to increase.
Exactly.
And that's going to be the end of a group of practitioners that do things in a certain way. I think the more immediate risk for me is we've invested quite a lot in terms of a system that how do you deal with SARS correspondence? So, I mean, you can imagine with the 22,000 odd guys on our profile, that excludes certain other projects we do. The amount of notices that SARS sends, is it just a reminder? Is it an additional assessment, which means you have to go check and object? Is it the demand? Is it the audit? Is it the verification? The list goes on. And I think the problem as a practitioner, if you miss one of those things, the clock runs against you. You've got liability for that if it goes wrong. And I think that is often where a practitioner plays a very handy role, that if you should make sure that your client receive each of those notices, that they know how busy you are with it. And automation is perfect in terms of that you don't need to have a human hand involved in that process, because it shows your value of how much notices there are, and it shows the value of, we know when is it just a reminder. Now, it really irritates me when SARS calls me to say, around the 20-something, just reminder you have to pay VAT or at the end of the month. Like they've got a person doing that calling sometimes, and I'm always courteous.
Yeah.
But the point is clients must be informed of how much correspondence there is. It does you no favors hiding it from them, except if a client says, hey, I know what you do. I'm so appreciative of what you do. Please, I don't want to hear from them.
Yeah.
That's also an ideal client.
Yeah.
But if you get money taken from your bank account and you've selected email as your preferred way of communication, and certain things were sent to you per email, or you've got an old address in terms of you're in trouble.
And that happens a lot. So a lot of issues are, SARS has done this wrong and SARS has done that wrong. But in this communication process, that is where a lot of things go wrong. And I think as you talk, I'm suddenly thinking about it is the old days of filing tax returns is becoming less and less. Yeah. What you really need to be is the client's protector, his watch person. So to watch that e-filing system, because the e-filing system's like Excel, it's electronic, but it's hard to use. You need to be able to say, I'm not waiting for you to tell me the return has to be filed. I'm telling you month to month what's going on with SARS. Now imagine here you are a client, and here I'm actually at SAIT, right? I'm a tax guy. If I receive any notice from SARS, I freak out. I don't know, is it a verification? Is it an audit? Are they going to zap my bank account? Worst, you get one of those notices in the middle of the day, you just go, oh my God. As a good practitioner, you need to protect your client or just keep them updated and say, look, this is what's going on. It's just a verification. It's fine. But you have to be proactive about that. If you're just waiting for the client to come in July or whatever to file the return, you're really doing your client a disservice and you're doing yourself a disservice because you offer your client more than that. You're that interface. So if you have 300 clients, the key is to manage that so that you're engaging with your clients to protect them. And that is the most important value of compliance. It's giving the clients assurance that they're safe. And I think when people don't manage it, they're not doing a core part of their job. Yeah.
Yeah, Keith, I think, other part of what you do, and it's an interesting space, is what I would call the aggressive tax advice that's doing the round. That did not exist a couple of years ago. And we increasingly getting contacted by clients that say to us, listen, I need to soundboard this of you. I've been given this proposal to do X, Y, Z. It often is, some of them are stunningly aggressive, and guys are tempted for it because it purports a certain benefit. And we sit in a situation where you obviously see those court cases that SARS have won the last year. And I don't know what your view is, but they seem to have upped their game in winning court cases.
No, I think one of the things, again, and we're getting to why I'm interested is people are trying to find business, and where you find business, starts to affect the industry. So instead of finding the business in the right places, some people have always been in the business of selling tax savings. And it's getting harder and harder to find that tax savings. The law is a lot tougher. They've got a lot more things out there that it's taking a riskier position. And the second thing is the old days of just writing a wonderful opinion without operational implementation is over. You'll get away with it only for so long until SARS really challenges you, and then your facts no longer work with the opinion. So when we look at SARS, they're doing two things. At an operational level, they're asking for a lot more information. So if you're going to claim something, you better have the proof to back it up. But then if you're going into the aggressive tax space because you can't afford to pay or whatever, you'll find that to the extent that you're in trouble, if you really take an aggressive position, they will push it through the system. And if it's going to go to court, you're seeing SARS win more and more, and legitimately. Not because of bias, but because when you look at the facts of the various cases, you see that the taxpayer loses. And you can talk about the Unitrans case if you want. You can pick up additional ones where when you start looking for the facts, you're going to ask yourself as an advisor, why did these guys even fight this case? Were they just trying to buy time? Because really, the facts just don't support what they're saying.
Or perhaps the opinion was correctly issued. Perhaps the implementation plan was
That can happen as
poor,
well.
but there was a change in guard. And if you look at if you look at Unitrans, you look at Coronation, at a number of these cases, I would argue in Citibank, the factual matrix presented to the court was not ideal, I would say. The evidence that your specialist leads is actually used against you to decide against you.
Yeah.
So I think there's definitely, if you're in the corporate space, if you are into that arena, it's not about the opinion. It's about, do you have the file ready and the tracking ready and the compliance ready, that if somebody says, why is this okay, that you don't start fumbling then for explanations.
Yes, absolutely.
Yeah.
I think the point that you're making, though, is having a good lawyer isn't going to get you anywhere in the court if the facts aren't going to back you up. Because there's going to be an intensive factual discovery. And if that is not available, or if it's sloppy, and sloppiness can hurt you as much as not having things available, that you're going to have a problem. And you're not going to just be able, and the reason why that becomes important is a lot of people, what they'll sell is what they call in the UK schemes. Here's this great way to save tax. They sell it for 20 different people.
Yes.
They're not mindful of the facts. And they go, we could win this thing. And the answer is, that's not going to get you anywhere if your facts aren't going to be able to meet that.
I think I'm quite sure this could be modern tax practice that makes a buck for a short period.
That's right.
Selling a thing, and then they make a buck selling another thing for a period.
Yeah.
And again, is that wrong? If that is what energizes you and motivates you, I guess that's okay. Yeah. But it's always going to be a game that's under pressure. Yes. I think. And I think as much as that's going to happen, especially when it moves international, because then you can fight with international law, not just the South African law, and you can use MAP and all sorts of, got a whole different artillery to work with. Yeah. I think that it's all about knowing what you're about. Yeah. But I mean, Keith, you've seen it in tax law being drafted. Yeah. Every piece of law that gets drafted creates opportunities. That's right. For those that want to try and sell a product on it.
Look, sometimes you do see people, some things work. I think the issue is it only works for so long. If it works, it works. You have to document it and do it right, but it will only work for so long until the legislature will catch up. But sometimes it doesn't work as well as people think. So just one of these share buyback schemes that people talk when they sold companies. Yes. And they were trying to get out of capital gains and they converted them to dividends. You're finding now that SARS is going back many years.
Yes.
So if you want to do these things, I'm not saying I'm a big fan of them, but understand the risks. It's not risk-free. And a business like that, as a client, as long as you're aware of the risk, that's fair, but you really need to be aware of the honest risk. So that business, I think, is becoming increasingly difficult. And now, when we turn to where we are now in the world, the big excitement thing in all of my conferences is now this artificial intelligence, right? AI.
Yes.
So I've got the Google one, and then I'm told that Bing has got the more advanced one. So Google says as of 2021, Bing says it's faster. Now that's just on the web. There's actually artificial intelligence where it goes per database. So people are building systems like opinions. Like there's something called Blue Jay in the United States, where you will have all of the relevant tax cases, and it will be reading those. So that practice suddenly is going to change. The practice of pulling out information is going to change quite a bit. So where that leaves the practice is there's a big fear, and government leaves these fears. I go to these government conferences. AI, the first thing they say is you won't need your accountant anymore. He's gone. Your lawyer somehow is a little better. I don't know why. I think, coming up with words on the Bing you'll see is quite different. But I mean, where do you see that artificial intelligence into your business? I mean, in South Africa, it's not here yet. It's on the way. It is going to be coming. Has it started to change your business? Has it helped you a little bit? Where do you see this thing going in the next year or so?
Well, I mean, Keith, I think it's a complete no-brainer that it's going to transform
Absolutely
business completely. And I'm fully cognizant of the fact that you'll still have clients that insist on coming to see you every year and kind of doing it the old way because that is what makes them happy.
Yeah.
So you'll still be able to have a business running it that way.
Yeah.
But you are increasingly going to be a business under pressure.
Yeah.
If you do it that way. And there was a court case it was a Cape High Court end of last year.
Yeah.
And I thought I'll just read this for the attendees because it's not a tax court.
Yeah.
And basically this guy, he argued his own case against counsel. And in the last paragraph of the judgment, the judge said, finally, I must mention that Mr. So-and-so heads of argument, he filed heads of argument which contained extensive reference to case law. In cross-examination, he was asked whether he prepared them himself. He said he had, relying on the assistance of Google. The advocate of the opposite expressed his disbelief. In argument, he told me that many of his colleagues were equally incredulous and were convinced only a lawyer could have drafted the heads. I admit that I've seen worse heads of argument prepared by members of the bar, but this does not evidence dishonesty to me. Rather, it shows perseverance and commitment, and the fact that lawyers need to watch out for artificial intelligence. One day soon, the computers are coming for our jobs. And I think that if it's already at the high court level being acknowledged, the days of opinion writing is going to be it's under pressure, and I think it's also going to create difficulty in practice where and we see it often. A client don't come to us for opinion. A client come to us to say, oh, this is what I've researched and I've asked ChatGPT about it. Please tell me if this is right.
Yeah.
And you must kind of try and untangle.
Yeah.
And that is a very difficult thing to do. I don't know if we can with a camera switch problems get onto ChatGPT to just kind of show an example of that.
But the days of writing long pages of opinions with a lot of repetition, I think, are over in order to run up this thing.
So I just thought,
is a good thing.
Keith, I mean, just for fun, I thought, let's say, for example, you must ask SARS you want to ask SARS to waive a penalty.
Yeah.
So you'd go to your taxpayer and you write to SARS to waive a penalty.
Yeah.
And you say 30 words.
Yeah.
And it says, I hope this message finds you well. I'm writing request a waiver for the penalty incurred. I appreciate your understanding this matter.
30 words.
Yeah.
Isn't that nice?
And the interesting thing is ChatGPT knows that if you're a taxpayer and SARS and waiving penalty comes up, it should use emotive language. I appreciate your understanding in this matter. Then the key thing about this AI is obviously how you prompt it.
Yes.
So I thought you say, good job, because you tell him that you like it.
Yeah.
Write again 60 words, because I want a little bit longer.
Yeah.
And it says, dear SARS, I trust this message reaches you in good faith. I'm writing to formally request. So it's interesting that it realizes it's SARS, it must be formally requesting this, a waiver of penalty assessed against my tax account. Due to unforeseen circumstances, I found it challenging to meet the deadline. Now, that it kind of figures out there's a deadline. Your understanding and consideration match were highly appreciated.
Yeah.
Thank you for your attention to this regard.
This is all taking microseconds.
Seconds. Now we tell it again. Good job.
Yeah.
Right to explain the penalties because you made a late payment of tax, which was caused by cash flow issues. And you enter that.
Yeah.
And what does the system throw out for you? Dear SARS, I hope the correspondence finds you well. I'm writing to explain the late payment of tax, which resulted from expected cash flow issues. These challenges significantly impact my ability to meet the deadline. I kindly request your understanding. Same story.
Yeah.
Now you just ratchet it up one more.
Yeah.
And you say, write to 90 words and add that despite that you had cash flow issues, you still made the correct tax disclosure and paid the correct amount of tax, and beg that compliant taxpayers should be treated well. Cleverly worded.
Yeah.
And look at how beautifully it phrases it. It says, I trust this message finds you well. Writing to explain the delayed tax payment caused by unforeseen cash flow issues. Despite the challenges, I ensured accurate tax disclosure and paid the correct amount. I humbly request that your understanding and leniency in waiving the associated penalty. As a compliant taxpayer facing unexpected financial constraints, I believe in fair treatment to those diligently fulfilling their tax obligations. That now we're getting into a range where I tell you, this might be a junior staff member.
Yeah.
You would rather ask this somebody fresh out of university would not get to this level.
No, that would be a day.
There's a bit of smartness now.
Yeah.
Now, something we do in our firm, because obviously we quite far down the path in terms of machine learning and automation and stuff like that, because we think it's the future. But I think we humbly have got that critical mass to drive that. Is I'm always looking for what is your eureka moment? What's your moment when your eyes open to how smart is this thing really, right? And I think in all our careers, when you deal with tax or you deal with case law or you deal with accounting, there's a moment in time when you suddenly get it. Now, when I got it is at that moment when I was asked to say, rewrite as a pirate. That's all I propped it. I say, rewrite it as a pirate. And I'm not going to try and make the pronunciation, but look how smart that is. RSARS, hope this letter reaches you in good health, matey. I'm spilling the beans about me late tax payment, or cursed by cash flow storms. Though me coffers be low, I assured taxpayers were as honest as a parrot's squawk. I beg your kindness in forgiving this penalty, for a loyal taxpayer like myself should sail smooth seas. Treat the compliant scallywags well, savvy. Now, not useful, but it kind of opens your eyes to the fact that you can give ChatGPT a persona and how well it writes. And I think that when you see this, you realize this thing is just going to get smarter. And you also, but the fact that it gets smarter also means that you're going to have to find in your own practice a way to control it intelligently. Because I kind of had a bit of a smile on my face when you said Excel is complex, and we in our own business had a chat to say, listen, we've got people in our own business who are at the 20-30% level on Excel. Whilst we've got others at the 110% level of Excel. You can have the same happening with AI and computer learning, where some are just going to be left behind. And the question is, how do you start to introduce it in a way that it's not just a playful thing, but it accurately adds real value to the practice. But the fact that it's going to speed things up, there's absolutely no doubt about that.
And look, I would think it would make it a lot more fun, because there's a drudge when you write. I know what I want to say, and I just want to throw a first draft out. That can speed you up quite a bit. But if you're going to count on the billable hours of an 8-hour letter, that's not going to work anymore, because that letter should be done within an hour or 30 minutes or whatever it should be. And you're going to have to keep up, because other people are going to be doing it if you're not. And it'll be interesting to see that, are these letters all going to look the same to SARS if people start using ChatGPT, or are they going to all kind of be a little bit different?
We always recruit for good tax consultants. I already see CVs all looking the same.
Okay.
We see marketing material and articles starting to look the same. So I think that authenticity is a very important part in terms of the new age.
Yeah.
But I mean, I think that we all know the change is going to be rapid.
Yeah.
We all are unsure exactly how hard it's going to impact you.
Yeah.
But I think it is extremely far from something like tax strategy.
Yeah.
And it is very useful in terms of information, doing certain tasks, part of the tasks, but other stuff, I think like trying to read a statement of account from SARS with multiple objections and stuff against it, and kind of responding to that. I think that space remains quite safe.
Yeah, I do think it's safe. But what is interesting to see is that your mindset's going to have to change. It's one thing to type into Google, and it's another to start talking to it. And I find, like, if I want to do research, it's, as you said, it's like talking to an assistant.
Yeah.
You kind of talk to an assistant. This is what I'm looking for. And you have to actually emotionally change. This is almost like a human being to give you those first drafts. And I think it's going to make it a lot more fun. But if you're hoping that mindless tasks is what keeping your business afloat, where it's cutting and pasting or just doing the same thing, that I think is going to be in trouble, because the other guys can be able to do it more and more efficiently as they get into the process.
He's going to come in at far lower costs than you.
Yes.
I think the guys that love long technical opinions, they're in trouble, because your client's going to come to say, why have you written a 50-page opinion for me, which ChatGPT has given me 45 of the 50 pages exactly the same? Because we could have made this penalty letter 20 pages if we wanted and prompted it enough. So I think, I mean, Keith, I think the year ahead, the market is under pressure. I think inflation is perhaps higher than what many people think it is. Yeah. I don't think to use the parrot. I think there's a bit of stormy waters ahead in terms of the economy and the world economy. It's certainly not indicating that it's going to be smoother. No. So at best, I think the year ahead is going to be same as 2023, but probably a little bit tougher. And I think that with these new technologies coming in, for the next year, you're going to have to obviously be aware that as your client base is under fee pressure, you make more money by kind of innovating yourself. Yeah.
I think that's why I think you have to experiment with Excel or whatever you have to do, like here with AI. We're going to have to be much more mindful of experimenting with those things as we go and trying it out. We can't bury our head in the sand, because I do think we're under pressure, even if there's not going to be a lot of growth. And people view this as a grudge purchase. But I think the value is not in how long it takes, like an opinion. The fact that it's 50 pages versus 45, that's not the way to build a thing. It probably never was. It's what's the value to the client, and making sure that the client says, this is the value I'm looking for from you. Because when I give an opinion, it needs to be an opinion that is risk protection. That's what its real value is. The length of it is not the issue. It's about the value, and they have to see that value. Maybe the price comes down, but it's really a value issue more than just how much time I write and how long I write. Those days are going to be coming to an end.
Yeah, Keith, I think I'm a bit of a believer that that history repeats itself again and again.
Yeah.
I'm a little bit of a believer that whilst everything gets reinvented, it is often just the old business model that gets modernized to some extent. If you look at what happened to the financial advisory space in South Africa, you look at how tax is run in the UK, Australia, US, I think one can learn from that as a possible path. And I think that all of these changes is going to push the tax fraternity far closer together. I think guys that just keep doing it on their own is going to be isolated. I think we're going to get to a point of what is a fair rate to charge for a tax return. What is a fair rate to charge for a trust return? Oh, only X. There's no way that guy can ensure that return's compliant for that rate. And I think that is where an industry body becomes strong and important. And I think that is where your network becomes strong and important. So many years ago, there was tons of independent financial advisors. They've largely collapsed into bigger houses now. And I don't think necessarily with tax that's going to happen. But it's like us. If you've got a client that is in farming that comes to us, and we've got clients with farms, lots of clients with farms, we do not try to do that. It's a specialist area. And I think that is a space of your big asset is obviously your client base. How do you ensure that you retain that client whilst reinventing your practice to a point where you still give the client the value they need? Because if you don't, they're going to end up moving.
Let me say this. I don't think that AI is going to put people out of business. I think some people will, but I think that ultimately the business is going to morph. It's going to change. So the old way of doing business is going to steadily drain off. And it's fine as long as you go to the new. And there's going to be a whole new set of business. I think there's lots of different strategies, increasing regulation and all of that, but the business has to change. The old style way of doing things is never really been that effective. I always say, look, I'm so much happier now that I can do a type in computer than do write by hand. Remember, going back to write by hand is a horrible thing. The way we used to do with typists and all of that. We became more efficient. I think this is really an opportunity to grab onto business that's going to be a lot more fun. But it's going to change, and we do need, and I think it's important for this year, and I even said that in an opening message, that rather than just focus on law and tax, we need to understand how the business is changing and how to do that in a way that is ethical, but also profitable and beneficial for our clients. And I think understanding that trend, I think that's going to be a fun journey, but you want to know where that's going. And that's really going to come down to a survival. And I think we at SAIT, I'd like to have more conversations with you and others to find out which way this industry is going and how people are doing. I think we as a professional body can help bring that community together in that way.
I think it's you must learn from one another.
Yes.
Because at least the two threats are clear. The one threat is SARS is getting fully automated. So stuff that you used to do and charge for. In the old, not so long ago, you still got paid by typing in an RP5 certificate into a tax return. All of those things are gone, and that's going to keep on disappearing because SARS is also going to get better at that. The freedom and access to information of clients is also going to be a threat for you. So at least you know those are your I think your biggest threats. Your biggest threat is not a competitor that has got a great marketing campaign. No, we're actually all in the same boat. Because the client that don't need a tax advisor because SARS does his return is out of the market, so to speak. The discussion needs to change in terms of where does a tax practitioner add value. And I think the simple reality is if you don't have a good tax advisor as part of your journey, you're just not going to create wealth. You're not going to give shareholders a good return. You're going to look back into the past and have incrementally made so many small mistakes that there's just a massive. It's going to be still central to how you operate, but the tax practitioner must play in that space.
Yeah, but it's not going to be about cutting and pasting. I think that you're going to have to manage the SARS systems, right?
Yeah.
Managing e-filing profiles.
Yeah.
That is a real task.
Yeah.
That has been neglected in favor of other things. It also, new regulations are going to coming in. So, so things are maybe disappearing, but other things are coming up. The question is how to capture where that activity is. But I don't think it's a one-way street. I think there's a new place. And again, what is the purpose of helping clients? One, compliance is assurance. So your clients are safe without surprises. Then there's strategic advisory. It's going to get more interesting. Yes, the easy games are gone, but to some extent, a lot of times advisory, you're just trying to prevent double taxation and overtaxation. Those kind of surprises, maybe not as sexy, but to be quite honest with you, the last thing the client wants is having structured it the wrong way, and they find they're subject to gross taxation, like in Unitrans, or they're subject to double taxation. There's more and more of those fears, and you want to steer your client out of that. And yes, they would love to have a zero tax, but they don't want to have a double tax or an overcharge.
Absolutely. I mean, Craig, I don't know, with the switch and me trying to the ChatGPT thing, which I hope was more useful than our faces on it. Because I don't know, do we have any questions or so, or that perhaps we I mean, that you can get up for us whilst we kind of make final comments? Well, that's a long question.
Now I'm in trouble.
Oh, there's many questions.
Yeah.
We're going to be here till 5 o'clock this afternoon. Yeah.
Okay.
Yeah, I don't know what you want to answer. I think perhaps just some closing statements, and then we can perhaps take some. I mean, from a SAIT perspective, what do you think is your year ahead?
Yeah, look, I think, the bottom line is we're all waiting for the budget. We get that going.
Yes.
Do we have a tax increase or not? My answer is probably not. Only danger would be NHI knocking away your medical credit.
Fully agreed.
That's it. But I think for the year ahead, from a SAIT perspective, what we're trying to do is refine our services. And what's most important is we want to be able to communicate with you. We want to know what you really need to help you. And that's why we want to engage with you to find out how the business is going. How can we help you in your business and in your practice? That's what our goal is. And to find out a lot of information on that side, the information we find, like here, we want to relay that back to you. That's my short opening message. And your agenda for the year?
Well, I think we've had a very, very good 2023 as a practice. We're very blessed. I think we'd like to just have the same 2024 over if we can, touch wood. But I think we're not unaware of how things will change with AI. Yeah. And I think the same way, if you look at how a Netflix, Airbnb, Uber, that business model is, by the time it took the market, the incumbent players, it was already too late for them.
Yes.
If that makes sense. Absolutely. So by the time that our landscape changes because there's new players or new technologies on, it's kind of already going to be too late by the time you see it.
Yes.
And I think that the only way to kind of deal with a shift like this is that you must be part of that change, and you must drive that change, and you must see it as a position of collaboration, not as a position of competition. Yes. We actually at the point where if a client says to us he thinks he can get it done cheaper somewhere else or a better job somewhere else, we will say to a client, and we don't say this with a funny tone in our voice, you should do that. And you're always welcome to come back to us if it's not the case. Yes. There's more than enough work out there for responsible professionals at the moment. And I think as long as we hopefully I've opened somebody's eyes with a pirate example, like for me, somebody might already have typed as asked ChatGPT to say, please draft a firing note or a retrenchment note for my assistant. I think that as long as we're part of that journey and we can, as a tax community, talk with one another, I still think the future is absolutely rosy for us and our children. And
Yeah,
that's
I think so too. It's interesting, about gaming. My son, when he was a kid in war games, he used to be very competitive. And now he does much more collaborative gaming. It's the two of them versus the computer. I find a collaborative world far more enjoyable, where you're working with multiple people with multiple different ideas. Let the computer do all the boring stuff.
Yeah.
It's the fun part of the job is engaging with other people.
Yeah.
So that's why I like this job. And my hope is at SAIT is we can help people be more together and more engaging. It's fun to engage back and forth like today in other conversations like this with the client. That motivates you. And so I think this is actually a good opportunity to change the way we do things to make it more fun. And you're right. You don't want a business that loses money. It's one of the things they tell you about business is make sure you get the clients that are right for you. They might be great clients, but if they're not right for you, it's not good for the client and it's not good for your long-term business.
Yeah.
So the old days of just chasing money to bring it in, it isn't there. You want to be suitable. So I do believe that this is a good opportunity if you embrace it. If we're fearful of it, we bury our head in the sand, then there's going to be a problem. That's really what I'm hearing.
Completely agree. Keith, I've looked at the number of questions. We're going to be till very late. So I think the quick call we should make on the questions is let's commit that we will definitely sanitize the questions because a lot of them reads the same. I've not seen a bad question, by the way, but I see each one of them kind of need about a 5-minute discussion. Some might need a whole webinar.
Yeah.
Like, please explain who is a beneficial ownership of a trust.
Yeah. Yeah.
Is it the founder? Is it the trustees? Or is it the beneficiaries? Yes. I mean, we can work through the UK guide on beneficial ownership of trusts. Yeah. Not that, well, I think in theory our law is the same. Yeah. So I think we will respond to each of these. We'll group it together and we will neutralize it. Please, therefore, no questions is asked with it. It will not have a response. They all will have a response. We're just going to be busy too long with this. Yeah. And just, I think, from my side, thank you so much for attending. We get so much by reflecting on these things and talking about this. And I think that it's consistent with the plan that we're all smarter. And so,
these are great questions. You have to figure a way to deal with these things because this is going to take an hour or two.
We will distribute it a bit.
Yeah, but that's great. I mean, I like seeing that. I feel bad right now, but yes, it's going to be beyond. People have things to do in their new year. Thank you.
Thanks for everyone for attending, and sorry about the bit of a video problem at the one part. It's all me and my ChatGPT part that I tried to throw on that didn't work so well. But same as SARS and auto assessments, next time we'll be way smarter.
That's great. I enjoyed it. Thank you so much, everyone, and look forward to the year. And feel free to reach out to us as well. Thank you.